welcome back to One Startup World, our 2023 summer conference. It is the premier global startup conference dedicated to helping innovative and disruptive startups succeed. It's the perfect platform and meeting place for startup founders to pitch their ideas, gain valuable insights, connect with other like-minded entrepreneurs and industry experts, and potential investors and partners along the way as we kind of build our community. We're next joined for our next segment of Fundraising Masterclass by Dennis Bond. He is the managing partner of Our Crowd, and Dennis is joining us today from California. So good morning to you, Dennis. Looking forward to your presentation. Let me hand it off over to you, and I'll join you in the backside. Okay?
Sure. Thank you, Glenn. It's great to be here. Good morning from California. Good afternoon, the rest of the world. Good evening, Asia. I'm going to share my screen first. All right. I've been giving this fundraising masterclass for many, many years. And obviously, everybody who is in the VC business knows that we are having a very strange times. Almost every time I give over, I've been speaking about technologies or fundraising, the venture capital market ecosystem. At the end of the presentation, there has been a number of people who asked me the following question: will 2023 be a dot-com crash 2.0? So in order to save some time, let me start answering that. My short answer is definitely no. However, it will be a year of slowdown and polarization. I think all know what's going on in the public equity markets. 50% has NASDAQ down with more than 50%, although we had a good start of the year. Still, from its high, it's been down significantly. When we look at the majority of the 2021 tech IPOs, most of them are all trading below IPO price. Now, when it comes to the private markets, we see the numbers very, they are down significantly. Now, if you look carefully, we may hit the bottom, right? We see the bottom here. Again, it's very, very important. This is not about valuations. This is about the global venture dollar coming in to the ecosystem. So we see that there are serious challenges for late stage and high burn companies. We see very few IPOs. Term sheets are being pulled, renegotiated. We see down rounds after down rounds and extensions on extensions. What I really I think what we'll see is that will be a lot of the unicorns that we always talk about actually will become unicorpses. So, I've been I'm a managing partner at Our Crowd, and we invested over $2 billion US into close to 400 companies, and we had a number of very significant exits. And this is my advice: there is still a disconnect between private and public, and prepare for the end of 2023 and for the beginning of 2024 as the great tsunami is coming. If you are a startup founder, prepare well. And your number one mission critical task now should be fundraising, and not just fundraising, but fundraising right now. So I developed this masterclass actually not because I wanted to, but because I had to. I've been working with many founders, and I've seen that they have been amazing. They have the biggest ideas. They are amazing in technology. But what has been their biggest challenge in fundraising? This. Let me show you a video.
Hello, my name is Saeed Jabrani. I am the CEO of AmitaBug, and we're here to revolutionize the way you report bugs on your mobile platform.
Happen will revolutionize location-based mobile news aggregation as you know it. We're making the world a better place through Paxos algorithms for consensus protocols.
And we're making the world a better place through software-defined data centers for cloud computing.
A better place through canonical data models to communicate between endpoints.
A better place through scalable, fault-tolerant distributed databases with ACID transactions.
And we are truly local mobile social.
And we're completely so-mo low.
And we're Molo-so. Low-mo-so, bro.
We were so-low-mo, but now we're mo-low-so. No, mo-so-low. No.
Right. Obviously, this is a parody from most of you hopefully recognize it from the show Silicon Valley. But this is having been a judge many times and having analyzed thousands and thousands of pitches, I can tell you this is not so far from the truth. So startup CEOs fail to tell their own story in a compelling way. And there is still a lot of money out there looking to be invested, but you must get investors excited. You must get investors excited. So I've been doing this masterclass all over the world, taught it some of the Ivy League universities, and did it probably hundreds and hundreds of times. Now I must say I'm really challenged, because typically these masterclasses are 1 to 2 days long. My shortest is usually 4 to 5 hours, and I will try to boil it down to 20 minutes. So what I really try to do is to pick up some of the most critical moments in fundraising. Fundraising is a numbers game. It's a numbers game, just like any other sales process. What you want, let's do reverse engineering. What you want to get, where you want to get to, is what I call money in the bank. Now, what do you need? What's before? There will be a final, usually called IC meeting at the VC. Before that, there will be many meetings. Let's just jump to the second meeting. Before the second meeting, there will be a first meeting, or often actually this first meeting will be through Zoom. And then in order to get the first meeting, there are a number of sources that will generate leads. It may come from an email, it may come from networking, it may come from word of mouth, intros, pitches, social media, etc. Now, let's look at actually the conversion rates. And these are, again, indicative only. But if you look at what is the number one, where is the highest conversion rate? It's obviously coming from warm introductions, word of mouth. Again, I just put a number there. Let's say it's 7 out of 10. Now, the next one is from networking. I truly believe that networking is your second best way to generate leads. Let's say it's 1 out of 10. What's the next one? Just if you think about it for a second, what do you think is the next one? So I think is the pitches. When you have TechCrunch pitches, competitions, it will generate also, let's say, a half lead, maybe 1 lead from every 20 interactions. Then you have email and social media. Then from the first meeting, you will get to the second meeting. Then the second meeting, there will be a number of other meetings will get you to the final meeting, and then to money in the bank. So what I will try to touch upon today is, from the networking, what do you do in a networking situation? What do you do when you do a TechCrunch pitch? And what do you do in your first meeting? Again, when we do the full workshop, we go through every single part of this equation and the process, and we boil down to understand what are the key challenges and what are the key tools, the main tools to get you and to maximize the conversion rate. So, question for the audience, and you may write it, you may answer it. What are most investors looking for? And I'm going to stop here. I know it's different. It will be difficult to interact with you in this through Zoom, but just think whether you can come up and whether we will agree with the answer. What are most investors looking for? So, before we answer that question, actually, I will give you a little hint, okay? You're not pitching a product. Many tech entrepreneurs think that you're pitching a product. You're not pitching a product. You're pitching a product to a customer. You're not pitching a product. Second thing is, you're not selling tech. Tech is, again, when you are trying to raise money, you're not selling your tech. I would like to think out of the box when you are raising money. Basically, you are selling a financial opportunity to a risk manager. Listen to this carefully. You are selling a financial opportunity to a risk manager. The investor is a risk manager. And what are the 2 main criteria for the investor? I call it risk and reward. You probably heard this before. Just like just like when a financial manager, a financial investor investing in real estate or investing in the public equity markets, basically same way, investors evaluate your pitch based on risk and reward. Now, I'm trying to give you a couple of ideas here, just to do a little exercise. These are some of the things that you will include in your pitch paying customers, TAM, total addressable market, founder's background, passion of the founder, attractive deal terms, validated problem, investors portfolio alignment, customer references, etc., etc. Try to do a 30-second exercise and put them in to the risk or the reward box. So let's say paying customers. Is it risk or is it reward? When you pitch this into an investor, do they perceive, when you talk about I have paying customers, will that reduce my risk or increase my reward? Okay, now think about that. What about TAM, total addressable market? What about founder's background? What about the passion of the founder? What about the attractive deal terms? So try to do a quick exercise. It should take 30 seconds, but think it through. Which box, which side of the balance should it go to?
Hey, Dennis, can they be both?
Okay, great question, Glenn. Some of them I think can be both, actually, and you'll see the answers. I agree with you. And by the way, Glenn, it's a great question. Obviously, every single of these variables can go into both, but one of them is really, I think, is much more significant than the other. Okay, so let's do this quickly. Paying customers. I think paying customers is reducing risk. If I am an investor, and I'm an investor, right? When you tell me that you have already paying customers, what does it do to me? Oh, okay, somebody has validated this already. That means it reduces my risk. Okay. Now, TAM, total addressable market. It's a huge market. What is it? That's reward, because that means that it can generate you're attacking a huge market, and we know that's one of the key criteria that you can build a unicorn company. Founder's background. Think about it. Founder's background. Is that risk or reward? I think it's obviously risk. Again, it's a little bit of both, but it's much more reducing risk. If you have validated background, you can tell me that, hey, I just sold my last company for $200 million. Wow. I know that you can do this again, reduces my risk. You tell me that you have been working at, I don't know, Microsoft or Google for 7 years, and you developed their last product X. Wow, this guy knows what he's doing. Again, reduces my risk. Passion, on the other hand, is something it's a reward. Oh, this guy has a passion, or this lady has a passion. Wow, I think this person will go far. Attractive deal terms. Now, interesting, and this goes back to Glenn's question. I think actually attractive deal terms is both. Attractive deal terms that reduces my risk because I can come in at a lower valuation. It reduces my risk. But if I can come at an earlier station, it also increases my reward. Validated problem, again, reducing risk. The portfolio alignment, very, very important. Most entrepreneurs are lazy, unfortunately, to do the homework. I really very, very strongly recommend prepare and look at the investor's portfolio, so you can say, hey, by the way, there is alignment here with your other portfolio. Also, they may only be invested in a competing company, and you don't want that, right? But if it's a portfolio alignment, that again, it's a huge reward for me as an investor, because I can do biz dev together, I can go to the same clients, I can help both companies to become bigger. Customer references, reducing risk. Again, if the customer already validated and they say good things about this product, it doesn't mean, oh my gosh, this company is going to be huge. I don't know yet. That depends on many other things, but it reduces my risk. Technology, obviously, is a reward. Other co-investors, huge validation to reduce my risk. If other co-investors invested in you, that means it's reducing, again, my feeling of risk. And IP, you have a good intellectual property, a great reward. And awards, you have some awards risk. So again, this is a very, very important exercise. And talking to, again, hundreds of entrepreneurs, always been, this is an eureka moment for them. because they don't think like this. What you are selling to an investor, again, is a financial opportunity, and they are risk managers. They are managing risk, and you need to find out what is that type of risk. For example, I stop here for a second just to tell you again about my background. I personally have been a serial entrepreneur. I sold my companies. I became a private investor. I personally invested in over 100 companies, of which 15 are unicorns. But I'm wearing two different hats. I'm also a managing partner for our crowd. So when you pitch to me, I'm wearing two hats. I can be a personal investor and I can be an our crowd investor. Now at our crowd, we're managing billions of dollars, but LPs, investors, investors' money. And for that, we have to make sure that we're managing the risk very, very carefully. We don't want to take huge risk because we're managing other people's money. My own money, I'm taking huge risk, but I'm looking for 100x. I'm happy to take big risk, but I'm looking for 100x. With our crowd, that risk-reward ratio is probably much narrower. Okay, now, but if you want to bring this down to more something that we can more hands-on, the number one thing that most investors looking for is actually what I think is called integrity. Integrity, because I need to trust you. You can have all the amazing story, but if I do not trust you, I will not invest in you. As Warren Buffett famously said, we look for three things when we hire people. We look for intelligence, we look for initiative or energy, and we look for integrity. But listen carefully how he continues. And if they don't have the latter, meaning integrity, the first two will kill you, because if you are going to get someone without integrity, you actually want them lazy and dumb. Okay, so integrity is really the number one thing that we look for. The number two is what I call promised land. And promised land is because I'm looking, because it's not necessarily true that every investor looking for the same thing. Beside the risk reward, right? Within the risk reward. Let's say some of the corporate investors are looking for more access to knowledge. They want to get access to scouting, right? A financial investor looking for more IRR, right? So I call it promised land, not just because I'm from Israel, but also because it is important that you identify the promised land of every single investor, because they will evaluate you differently. A corporate, a financial institution, and a professional VC will all evaluate you on different variables. And the third is capability. Can you deliver? Okay, so the kind of challenge with pitching is that you can't just go, hey, I just came out from Mr. Dennis's fundraising masterclass, and I know what you're looking for. So, hey, I have integrity. You can trust me. I have a great idea, and I have the capability to do so. So invest in me. Sign here, please. Right? The art of the pitch is how to build a story that conveys all three without directly stating them. This is the art of the pitch. And this is the reason that we build a story. That's why we build stories. Again, the story, the idea of the story is to indirectly tell the investor, you can trust me, I have a great idea, and I have the capability to get you to your promised land, whatever that is. So, and storytelling is actually the most underrated skill. This is from Ben Horowitz, the one and only, right? He says, storytelling is the most underrated skill. You can have a great product, but a compelling story puts the company into motion. If you don't have a great story, it's hard to get people motivated to join you, to work on the product, and to get people to invest. Story is actually not just for fundraising. Story is also, you need the story in order to get the best people on the team, finding your co-founder, get other team members, and also, obviously, to sell to customers. So we won't have time for this, unfortunately, but usually what I try to do is to find, there are 5 basic pitches that we have to develop. Now, you see 4 of them already. The sales pitch, you go backwards. Sales pitch, which you do for obviously customers, the meeting, the first meeting when you meet the customer, the investors first time, whether through Zoom or physically. Then there is the TechCrunch pitch, competition pitch, TechCrunch pitches. Then there is what I call the networking pitch. But there is one pitch before that everybody should know. Now, if I ask you, and if we were physically and we had the time to go through the answers, I think most of you would say this. It's the elevator pitch, right? That's what I need to learn. However, I strongly disagree. What I think you need to find is something much shorter, which is I call the opener. Now, what do you think? How much time do you have for the opener? Any thoughts?
Less than a half a minute.
Less than a half a minute, Glenn. Okay, not bad. So I have done this again hundreds of times. Usually the answer is somewhere between 30 to 60 seconds. And I think, Glenn, you are way too sophisticated and you know you have done this before. So we will get there in a second. But the full exercise, if you had time to go through, is this, and maybe take a screenshot of it and you can send me the results. But basically what I want you to do is to fill out each column. So time, how much time do you have? Where, when do you do it? It's pretty obvious, the second question, but I just want to make sure you have it. Then what's the goal? What do you want to achieve with this pitch? What should be in it and what should not be in it? Okay, so I'm not going to be able to again go through. Usually we have 5-10 minutes at least, or sometimes when we have a whole workshop, a half an hour. Then you fill this out. It's much better that you fill this out than me showing you the results, because then you don't do the work and you will not gain so much knowledge from it, because I want you to do the mistakes. I've done this again hundreds of times. Most people make very mistakes in this, and you need to see the mistakes you do yourself before you have. By the way, important disclaimer: in fundraising is both art and a science. There are no rules. Okay, I have seen funders who didn't have a deck, who didn't even have a story, and they raised tens and tens of or hundreds of millions of dollars. And I have seen people who are doing everything by the book correctly, and they didn't raise, and they weren't able to raise, right? However, that's the art part of it. However, there is a science. There's a science part of it, and that's what I'm focusing on. If you do the science correctly, I guarantee you're going to increase your conversion rate. Whether your conversion rate now is 1 out of 100 or 8 out of 10, I don't know. But if you do the science part and you follow these directions, I guarantee that I guarantee that you will increase the conversion rate. Okay, so let me go through the first line, and then we're gonna skip the rest for next time, or you can just, you have my email up here. Feel free to send me your answers, and if I have the time, or my team will look at it and can give you some direct feedback. Okay, so the opener, how much time do you have? So I think you have 7 seconds, and that's it. 7 seconds. Listen to this carefully. 7 seconds. When you are at a networking event, TechCrunch, Super, whatever it is, you are at a networking event. Somebody introduces you, or you go up to an investor. Anything more than you do longer than 7 seconds is a turnoff. It's a turnoff. Think about it. Think about somebody came up to you and spoke longer than 7 seconds and start immediately pitching. It's total turnoff. 7 seconds. Where do you do it? Okay, at an introduction. Now, what is the goal? Think about it for a second. If I asked you this question and you were in my class, in my workshop, what would you write here? What is the goal? Glenn, any thoughts?
I think you're trying for a connection, an awareness, perhaps.
Okay, I like that. So what I think goal is basically the only one goal you have is to get permission to tell your networking pitch. That's it. Whatever that is, all you want to get with the opener, that the other person, the listener, me, the investor, will tell you, hey, that's interesting, tell me more. and that's also, already answering what should be in it. Anything to tell me more, whatever that is, In our crowd, we are a very disruptive venture capital platform, right? We have a platform. We are one of the biggest and we have a very different, unique way of doing it, right? We're not just a typical VC. If I'm start telling, hey, Mr. Investor, this is what, it's already a turnoff. All I'm saying, we are one of the biggest investors in the world or in Israel. Boom. Okay, really? How do you do? But you have our crowd in, you have crowd in your name. What is it? Oh, thank you for asking. Now I have time to tell my pitch. So it's very, very, and because I'm going on to, I'm speaking at these networking events, etc. And after I come off stage, tens of entrepreneurs come to me, hey, can I pitch you? Obviously, they didn't listen to the message, right? They come to, hey, I'm doing this. I've the technology, and the problem is that, okay, you think I will remember? No, get me, as Glenn said, get a connection, get me in those. So anything to tell me more. Now, what should not be in it? Everything else. Take out everything else. Okay, nothing else. So I'm also gonna go maybe very, very quickly. Just I'm gonna go to the TechCrunch page. Okay, TechCrunch page, because many of you do this. By the way, I'm gonna actually skip this as well, and I'm gonna go to the first meeting because I think many of you startup entrepreneurs and CEOs, you're gonna have your first meeting. Okay. So the first meeting, you usually have 30 minutes. You don't have 60 minutes anymore. Those days are over. When do you do it? You do it when one-on-one of investors. What do you want to achieve? And again, very, very important. Many investors go wrong here. You only want to get to the next meeting. You do not want to close on the first meeting. Often what happens that during the first meeting, you think that you're going to get the money or you want to tell the whole story. What should be in it? And again, here this what you want to achieve is seeing. Maybe I give you a little bit of an idea. See the pitching as a video game. You don't want to save the queen or the princess immediately. See it as a video game. You just want to get to the next level. The TechCrunch pitch should get you the meeting. The opener should get you to the networking pitch. The networking page should get you to the meeting. The TechCrunch pitch gets you to the meeting. The first meeting should get you to the next meeting. And all you want to tell in these situations is the integrity, promise, land, and capability. These are your three most important goals. Okay. So what should be in it? Everything, but in 12 minutes. Now you think, Dennis, are you crazy? Didn't you tell me that you have 30 minutes? Correct. But this is how your Zoom session is going to happen. The first 3 to 5 minutes, there will be issues with Zoom. We started late, right? As well, right? You will be late with 3 to 5 minutes. There will be issues with Zoom. The investor comes in late. 2-3 minutes icebreaker. Where are you? Who made the introduction? Now let's go backwards. At the end, you will have you want to get into a 10 minutes discussion because you don't know what your investor is looking for. You don't know what your investor is looking for. You don't know what the investor's promised land. So you want to get into the discussion very, very quickly. Some of the investors are looking for total addressable market. Some of them look for technology. Some of them want to understand the team. So it is, so you want to get into this discussion. Now you want to have three minutes rep and follow up. How much time do you have? 12 minutes. This is 12 minutes. And you want to do a 2 minutes introduction on yourself, and then 10 minutes, 12 to 15 slides maximum. Again, ladies and gentlemen, when you are pitching, when you have half an hour, you need to be ready in 10 minutes. Otherwise, you're going to miss the boat. I have done this again many times. When an entrepreneur comes into the room, you have 30 minutes, they prepared a 27 minutes pitch. 27 minutes, so there is 2 minutes left if there were no Zoom issues, etc. Okay? So build the 12-15 slides that you can say in 10 minutes and put everything else in the appendix. In depth, technology, and go-to-market, etc. The different, product map, etc. Put everything, have everything ready. but you don't know what I'm interested in asking for. Okay, this is just take a screenshot quickly. This is a good, a very interesting from the Founders Institute that put in what should be in your 10, 12 minutes pitch. I'm not going to go in. There is very good. There are very good sites available, so you can look at all the all of the global. You can Google it and find ways to do it. So let me just finish up with one of the key Jolly Joker, and that will take one more minute, and then if we have time, we can open up for questions. The number one Jolly Joker card you have is the following: is what I call validators. Validators are your most important Joker cards. And I always spend a lot of time with my entrepreneurs when I work with them. I'm also doing an advisory for working with some of the best startup founders around the world to identify what is your best validator. Again, what are validators? Validators, anything that makes me, the investor, feel comfortable. What are the best validators? You have a tier one fund lead. If you come to the meeting and says, hey, I'm raising $10 million, Sequoia put in already $8 million, and 2 million left, are you interested? Right, I'm listening. You got my attention. What's another great validator? You're a serial entrepreneur. Hey, I just sold my last company to Google for $250 million. I'm working on something much bigger than that. And are you interested? I'm interested. You have real traction, both revenue and high growth, right? You have real traction, right? You come to me, hey, we bootstrapped this 6 months ago, and now we already have $3 million in revenue in 6 months. I'm listening. So these are the best validators you can have. Now, obviously, you will say, Dennis, come on, it's not fair. You have, it's most of us don't have that. I was in your shoes. I know. I really was in your shoes. I built companies. I was a serial entrepreneur. I know. We don't have this, right? So how can what are the tools that we can come up with if we don't have any of these three? If we don't have a tier one fund lead, if I'm not a serial entrepreneur, this is my first gig, and if I don't have traction yet. So your job, and this is what I work very closely with an entrepreneur, is to build anything, come up with anything that the investor can relate to. For example, did you put your own money in it? If you tell me that you put all your savings in it, you got my attention. I know that you will be all in. What did you do before? Tell me what you have done before. Maybe you were at Microsoft or Google, or you were an analyst or something that again gives me validation. Did you win any awards? Find any awards that you won. Did you sign a POC, a beta testing with a multinational, a corporate, or any other outside validation that again makes me comfortable? So I stop here. Glenn, I'm happy to open up to questions. Again, I'm happy to work with the founders that think that they want to work on their pitch, they want to increase their conversion rate, and feel free to email me or LinkedIn me. Glenn, questions?
And thank you, Dennis. Great job, great observations, great templates, great visuals for the audience to keep in mind. And of course, all that works whether we're in a downturn or an upside, for sure, but especially in a downturn when people's attention is perhaps limited, their capabilities, their ability to do something might be tight as well. So you may only get one bite at the apple. So these are some tremendous points for our audience to understand. I really enjoyed the risk and the reward kind of seesaw on how it kind of plays out. Kind of focusing on eliminating risk, and that's a big part of for an investor is what are you going to do to make my investment safer? And the points you had as to customer references, awards, validations, background, paying customers, all of that certainly works towards that. And then on the plus side, the reward, the upside, the passion, which is sometimes again hard to judge, but I mean that's where the face-to-face meetings I think becomes rather important. The portfolio alignment is critical. What a great tip for people to keep in mind, because again, you're getting one bite at the apple perhaps are they, you know, are they interested in you? Or are they, do they have too many investments in that space, right? I mean, that's incredible to keep that in mind. And thank you. I think also I like to think of myself as a storyteller, and I agree. You're not pitching a product, you're not selling a technology, you're selling a story. You're selling yourself, your background, your hard work, and the reason that you're including them as we go. Let me see here. We may have a piece here in the chat. Let me double check. Oh, okay. We got a good question coming in here. Dennis, where do you find the best places to network?
Sure. So I'm not sure which location you know, the one who wrote the question, where you based, but I think going into conferences are, you know, and tech conferences are obviously perhaps the best place to network. Again, Disrupt, TechCrunch, you know, all the the competitions. If you are in Europe, you can go to NOAA, and you know, and all the supers. Conferences. I think that these are, and again, do the reverse engineering. Think about it. Where do I find my investors? If your investors are, let's say, if typical venture capital funds, if you are already at Series A, Series B, then you go to the conferences where the typical VCs are. If you are early stage, seed, pre-seed, you're looking for your first month, I don't think that's where the VCs will not invest in you. You want to find angel investors, right? And you want to go to places where, you know, you want to be connected to angel networks where they are. If you are selling something like a deep technology, right, where, let's say in the mobility sector, where your most of your investors could be car companies or OEMs or tier one suppliers, go into the conferences where you find those type of investors, because that's much more strategic investment. So think out of the box, go backwards. Where do I find my type of investors based on stage and based on industry, based on what my value proposition is, and then, you know, identify it obviously as close to you geographically as possible, and go for it.
You know, it's interesting you bring that up. I was working with a student a couple of months ago, and he was very much interested in sports management and wanting to work at, you know, with teams. And he was a hockey fan at the time. So I asked him kind of out of the box. I said, "Do you have a ticket to the NHL draft?" He goes, "You know, that's a great idea." I said, "Well, go where they are, right? If you're looking for the teams and the management and the scouts, then invest in a ticket and go down. I'm sure you can get like a general admission ticket and mingle and see what's going to happen, right? So go where the people are." Listen, Dennis, we're a little bit tight here on time.
Sure.
Thank you. Outstanding. Please come back again. I mean, again, maybe even a longer form version of this, because I think you've got so much to add and some tremendous insights for our audience. And congratulations.
Just the tip of the iceberg.
Yeah,
but again,
absolutely. Congratulations on all your great work here.
If you want to spend the whole day together, we can discuss it.
Well, we can follow up for sure. All right, listen, everybody. Thank you.
Good luck, everyone.
From our crowd joining One Startup World today. All the best, Dennis. Take care.
Bye-bye. Thank you. Bye-bye.
Bye.